The debate over whether to invest in China right now is heating up as big billionaires weigh in. George Soros is saying steer clear, calling BlackRock's strategy to increase allocations there a losing bet. Soros saying, quote, pouring billions of dollars into China now is a tragic mistake. The firm, for its part, firing back, saying, quote, BlackRock's clients around the world, including many U.S. clients, seek a broad range of investments, including in China, to achieve their retirement and other financial objectives. Now, legendary investor Ray Dalio is also weighing in, saying it's a part of the world that one can't neglect, and not only because of the opportunities it provides, but you lose the excitement if you're not there. All of this comes as China's regulatory crackdown continues. So does China represent a threat or an opportunity for investors? Joining me now, Marco Papich is chief strategist at the Clock Tower Group and author of the new book, Geopolitical Alpha. And DeWardrick McNeil is managing director at Longview Global and a CNBC contributor. Great to have you both here. Marco, in a nutshell, should investors be cautious about investing in China, or did hedge funds, for instance, and everybody else just learn a massive lesson from the losses that they've taken? Do you think that's going to be enough to turn them off of exposure there?
I think definitely in any period of transition, it makes sense to be cautious. And obviously, China is undergoing several transitions. I think there is less emphasis on efficiency of the economy, which investors have gotten used to, more emphasis on income inequality. And also there is a transition from a U.S.-centric, tech-heavy developmental model to something more akin to what Chinese policymakers would prefer, which is a German, Japanese-type manufacturing-heavy process. Lots of uncertainty. There's also domestic political uncertainty with the leadership transition next year. That said, I also think that there's opportunities in these kind of volatile transition moments.
Sure.
And so, I don't think it's a black or white, one or a zero.
If I'm quoting correctly from your work, you've said, you can be tactical in China. You can look at opportunities in some of the really sold off TMT names in China. You're saying they're basically giving you the asset allocation. They want you to invest in hard tech over soft tech. So would that be your advice for investors?
So there's a tactical recommendation and a long-term strategic one. Tactically, I do think that if you have the risk tolerance, you could bottom fish in ADRs. They have hit their resistance level. Valuations in Tencent and Alibaba have been crushed. Yes, if you have the risk tolerance, sure, why not, tactically speaking. More strategically, I think what's interesting about China is that it's the only country in the world that's basically giving you a sectoral asset allocation for free. And as I said, they're emphasizing hard tech, what they call hard tech. There's a lot of innovation in EVs, batteries. It's not really just to save the environment. For China, it's geopolitical, it's national security, and so on and so on. So I do think you can also be strategic in longer term.
Right.
I don't think I would be fishing for tech names on the longer term trajectory, but hard tech, yes, definitely.
So, DeWardrick, here's where I turn, and let me quote what I think is probably the key part of what George Soros wrote in the Wall Street Journal the other day. He said, earlier efforts, investments by the U.S. and China, could have been morally justified by claims that they were building bridges to bring the countries closer. But the situation now is totally different. He says today the U.S. and China are engaged in a life and death conflict between two systems of governance, repressive and democratic. DeWardrick, so in other words, what Soros is saying, that there's a difference between people seeing an investment opportunity and also thinking to themselves that that's acting in the best interests of the U.S. Now, there are going to be investors who say, I don't really care what's in the best interests of the U.S. But for those who do, what about the point Soros is making?
Yeah, well, thanks for having me, Kelly. First of all, I agree with my fellow guest that, look, this is for me about being cautious. If you accept what Soros is saying on the political side, and by the way, I do, then one should definitely steer clear of China. But I think there are other reasons outside of perhaps the hyper political ones that Soros has raised for investors to be cautious about China. And that is whether or not you care what's happening in China. China has spent the last 20 years or so with a very benign strategic environment. That is no longer the case. Washington has certainly soured. The EU has soured on China. And that will change China's calculus on how it organizes its economy and how long the welcome mat is for foreign investors. And China would love to open this up to sectors that in the short term, they really need knowledge transfer and capital to do the things that they want to do. But what we've seen is that over time, that welcome mat shrinks quite a bit when China has developed the sector and then feels like it can move forward without expert or outside help. And that's one of my major concerns here is the time horizon.
And so, in other words, you're saying, if you have concern about the purpose of your investment, that, to heed Soros's warning, but even if you think that there's a strategic opportunity and you're sort of regardless of what Soros is warning about, that investors don't know enough to know that the landscape that they're, investing into will look the same in a few years' time as it looks today. Am I getting that right?
I think you put it far better than I did, Kelly. Look, I think where we are right now, it was Donald Rumsfeld, if I may quote him, who said there are known unknowns and unknown unknowns. And in China right now, we have both. And so I think, for me, it's time for us to wait a little bit to see where this is going. And as I've said before on this air, this is more than just a regulatory event. This is more than just one or two sectors. Xi Jinping has indicated that he's looking to retool the Chinese economy, and all of those things, not just sectoral things, all of those things should give investors pause for a moment, is where I sit on this.